Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, January 27th, 2026. We actually still had to split indexes, but that was primarily because of United Healthcare. But we had the NASDAQ that finished green. The S&P made new all-time highs for a brief second and pulled back, but out of the blue, we actually had IWM that closed green for the first time in 4 days since we made this top. I don't really, this is kind of tough to even call it green. It was not really a very strong day. It was towards this end right here that we got that push up. But in any case, let's start off with the S&P. Yes, can the S&P get up to the 7,000? We were just about there. But it didn't get there. If it gets up there to 7,000, 7050 is what I'm looking at. But I'm not sure if maybe something happens tomorrow with the Fed. I'm not quite sure. It's probably going to be a pretty boring day as we head into that. But possibly we get a gap higher. If we do, most likely it's going to be a gap to new all-time highs fade trade. And we just be looking for that gap to get closed there. But really, this is my reasoning, is we got these bearish divergences on the 15-minute chart. We ran into the all-time highs, which they could have blasted through that, but yet we saw, the indexes pull back from there. And this is this is an hourly chart. And when we take a look at the 15-minute chart, we actually have the same thing. And now we have this bearish wedge that's forming right here. And if this is the case, we're looking, and I think it would actually be healthy, is a pullback down to the 69.33 level. That would give us a chance to reset, regroup a little bit, and then from there, see if the bulls want to make that move up to the new all-time highs again, or do we need a little bit more of a flush out? But like I said, these bearish divergences that have been forming, it's not something that I like to buy into, even though I'm not saying get bearish on this market at all. I'm just saying be very careful with just jumping on the bulls bandwagon right now, because it's definitely a fractured market. We know that from the small caps and the Dow. And then we have the tech or NASDAQ and the S&P that have been grinding higher. And, as I put in the morning notes, or I think it was the morning notes, that, when they're not all running in the same direction, what happens is the engine overheats. It's just everything has to be moving in one direction. You can't really see selling in one index, buying in the other, because typically it usually ends in some kind of short-term top. I don't believe this one's going to be any different. But in any case, it's something that I will sit there and say, hey, if the S&P is going to continue higher, it can continue higher without me. Last time I did that and I moved over to the small caps was way back when we were it's when the S&P was below way below where we were, but it ended up that the small caps outperformed. And then just last week, when the small caps did this parabolic move to the upside, I said that I'm not really too interested in the small caps here, and I thought there was going to be a rotation out of the small caps into S&P, and that's exactly what happened. And from there, we've seen the IWM give back almost 10 points, a little under that, and that's just in a 3-day period. So we retraced this entire move. Basically, we closed this gap. Now this is the thing that's a little bit, where I've been leaning more on the bullish side of the small caps, even though I've been getting crushed on that. You can see that we have buy signals on the 15-minute chart, but here you can see we have these buy signals, but it's not really the type of buy signals that I like to see. I want to see a more, like, this is a perfect example of what we're seeing here. Is this is moving up as it was moving down, and we got a buy signal, but yet we got another lower low, and this was a better, say, a little bit more defined buy signal on the 60s, and then we saw this big move. So I think that if the bulls can get it above this 264.77, they did for a brief moment today. I would expect that we're going to make a move back up to the 266, 267 level. But this will be our wave A, that will be our wave B, and then our wave C is probably going to take us in between the 260 and the 258 support right here. That's where I'm actually looking for a low that will be very, I think we'll be able to have a nice trade off of it to the upside, because if this is the case, then this pattern is going to be complete. And from there, my targets are going to be all the way up at 275 and possibly 280. So the small caps I like, I would really like them down at the 258 level. I'm not sure if they get there, but on the upside, we want to keep an eye on that 267, because this is going to be where sellers are waiting. You can see when we got up here, they sold it right off. So if the bulls can get it above it, then I would anticipate that the 69.50 is going to the gap's going to get closed. And again, we have Fed day tomorrow, so maybe he says something that's really bullish for the markets. Nobody really has it priced in that he's going to cut rates, and I don't think he's going to. But in any case, it's probably going to be a fairly flat day, and we just have to wait until what they say. So, so going back to the S&P again, if they can get above these highs and stay it, I would anticipate a move to the 7,000, 725. This is the ABC move up to the 70.51. Maybe they get there, but like I said, these sell signals have me thinking that I don't believe they're going to be able to get there. But right now, there's been an active bid under the S&P, and until we see any kind of resistance support lines taken out, which I have right here. So really the first one, what did I put? Hang on, let me see something. Yeah. So here you can see really the first support level I'd be looking at is going to be the 69.67. If that gets taken out, then we're going to see a move come down to the 69.50, which would be a decent little retracement, because this would be where the buying really started on this parabolic move. And if it gets below it, then we're looking at a move coming down to the 69.33. And if that gives way, then we're looking to close this gap. But right now, I think one of these levels may hold, but as I said, running with these bearish divergences is very, very dangerous, and it's not something that I'm really interested in joining. So we actually did okay with the portfolio today. You can see we made a good part of our the losses that we had yesterday. We probably would have matched them. Again, the trading I did with IWM today was not satisfactory at all on my end, because I keep thinking we're going to get that big move to the upside where we're going to get a squeeze that's bringing us up to the 266. So when we got, it came down, and once we got up to this, the 263.50, we took the 263 put and the 264 call, and we were in the money here on the calls. But I thought we were heading up. We came back down. We could have been able to take our profits or get out at even on the 63s. It came back up again, and again, I thought we were breaking through it, held it. And so the thing is, I held on to these trades the whole time. Even though it was a big range, even when we started coming down, I was thinking that these lows were going to be taken out and we were going to come down to the 262. It reversed and came up, and it just was really, it was a day that if any kind of rips you would have sold and any dips bought, you could have made a lot of money. But right now it just didn't work that way, and it's not something that I'm too happy that I played around with, because we had the chances of making money on both ends of it, and unfortunately I didn't. So with we would have been up to that 37.50 if I didn't take those trades on that. But in any case, it is what it is. We made a profit today, and with that, I will see you guys in the morning.